Hi there, and welcome back to the Fuse Show. Today we have Eric Satz of AltoIRA. Today's title is Investing in Alternative Assets with an IRA, and our tagline is Yes, you can invest in Bitcoin with an Alto crypto IRA. Eric is the CEO of AltoIRA and has been in the investing space for many years. Thanks for joining us on the show.
David, thanks for having me.
So I guess the first question that might be pressing is how do you feel about the recent sell-off in crypto? It's been a relatively turbulent 1 week.
Well, I think whenever you have a new asset class, you can expect some volatility.
hmm
I think, how each individual responds is really up to them. I personally am a long-term investor in crypto, and there's nothing that has changed about the fundamental thesis for me. And therefore, I'm just using the opportunity to buy more. I'm not selling. Although there are, I think thanks to, in part to Robinhood, there is a significant gamification that
For sure.
has evolved with respect to investing. And so there are a lot of buyers and sellers of crypto every single day, every single week, every single month. What I can tell you, having looked at our data over the past week, we have way more buyers than we have sellers.
Okay.
And so, I think folks have a long-term perspective, especially when it comes to your retirement, which is what you should have. And the other thing I will say is that while that is a tagline that you used at the open, it's not our tagline
Okay.
per se. We really believe in portfolio diversification and making sure that you're putting assets to work across asset classes, not just in one asset class.
And just to make sure I have the right understanding in mind, crypto IRA is purely an IRA business, right? You don't manage investments for non-IRAs.
That is correct. So the Alto Crypto IRA is one of our products. We also allow you to invest in real estate, private equity, venture capital, securitize artwork and other collectibles, whatever it may be. So the idea is that we provide access for individuals to true portfolio diversification opportunities. Crypto happens to be one of those asset classes.
Hmm. And how did you choose to get started with this business?
Yeah, so that's a really good question because we have to go back to about like 2013, so 8 years ago. And this is when I was still managing a venture capital portfolio, and I wanted to use my retirement savings to invest in the next round that one of my portfolio companies was doing from a financing standpoint. But the first thing was that I didn't know if you could do that. I didn't know if you could use your retirement money to invest in a private company. So I went to Google and I asked Google, hey, can I do this? And Google said it was true that you could in fact do this. It's not like it was Wikipedia or something. If Google said it was true, it had to be correct, right? Or if Google said you could do it, it had to be correct. So I went to my financial advisor and I said, hey, I'm going to make this next investment out of my retirement account from a duration matching standpoint and from a risk reward tax advantage return standpoint. It makes perfect sense, which my financial advisor understood. But then my advisor also told me that I couldn't make that investment with them as custodian.
Oh,
And I couldn't possibly understand why. And I'll spare the audience the long part of it and just get to the short part of it, which is I had to go figure out how to get this done because it was legal, and I wanted to use my retirement savings to make this investment. And that was my introduction to the self-directed IRA industry at the time. I ended up making 3 investments this way with what I would now describe as legacy industry players. And the first investment took me about 8 weeks to execute. I did all the work and I wrote a check at the end of the process which, I ended up looking like you. I pulled all my hair out, totally bald guy. And, just out of sheer frustration, I just couldn't understand why, if I did all the work to make this happen, why am I writing a check to the custodian at the end of the process? Didn't make a whole hell of a lot of sense. And then the other two investments which followed, where I switched custodians, just got worse from there. At which point I have this, itch I don't seem to be able to scratch enough, which is, if I see a big problem, I want to fix it. Mm-hmm. The real question was this a big enough problem to try and fix? And I found $30 trillion sitting in retirement savings accounts, very little penetration with respect to alternative assets, and I identified 3 hurdles or obstacles as to why that may be. The first was that, people just don't know you can do this. And so I had been investing for about 20 years, and I had no idea, which is why I went to Google in the first place. The second was the complexity of the system that was created, and the time sink required to get a deal done, which really is 2 problems. The first is that I have to figure out how to do this on my own, and I have to have the time to do that. The second is that most companies are on a deadline and aren't going to wait for you to figure out a self-directed IRA process in order to be able to make your investment. And the third was cost. So unless you were writing a 6-figure check, it was really hard to justify the annual ongoing maintenance cost of this self-directed IRA account. And so as I got into that, what became sort of the guiding light or North Star for me was to build for what we now refer to as alternative IRA investing, what TurboTax had built for self-filers, right? Which is to use technology and to connect this platform in a way that built a network with investment opportunities so that we could create both a speedy and seamless process, but also a cost-effective process. And so that's what we've been doing with Alto since sort of like Q1, Q2, 2018. Fast forward, north of 500 million in assets under custody, banging on 10,000 customers at this point. The team during COVID, the team has grown from 16 to 70. So it's just been a satisfying ride so far, but still a lot to do.
Are you both a custodian as well as an investment opportunity presenter, or is that how it works?
So we are a custodian, but we're software as a service platform. So we are not a broker dealer. We are not a registered investment advisor. But we do make those things discoverable, but you have to be looking, right? So we're networked with, 30 different investment platform partners, right? So if you're looking for artwork, you're going to Masterworks. If you're looking for farmland, you're going to Farm Together or Acre Trader. If you're looking for early stage opportunities, you can go to Republic or AngelList. So our partners there. And we just try to make discovery easy and then execution even easier.
How did you find all these alternative investments to, invite to be the initial, visible partners, if you would, on your platform?
Well, we started with AngelList back in, early 2018. And I think arguably AngelList was the single most recognizable alternative investment platform anywhere. And basically, once we were able to announce that we were their partner, it was sort of like the stamp of approval for everybody else, right? And this ecosystem has been growing up around us with us, right? So Reg CF didn't pass until 2016. In addition, you have what I refer to, and as others refer to, as the fractionalization of securitization taking place, meaning you no longer have to buy the whole house or commercial building. You can buy a piece of it along with other people, right? And so you can take that same approach and you can apply it across real assets, and you can apply it across asset categories. And so I think, for us, this is where I think it's better to be lucky than good, and for timing to sort of play out in your favor. Our timing turned out to be good, and we seem to have been in the right place at the right time, and received the right stamp of approval at the right time, such that we became attractive partners to everybody else that was creating this ecosystem that we now see really starting to take off.
Was it difficult to attract Angel.co to be the first one?
So have you ever seen the movie Shakespeare in Love?
I have not.
Yeah, you're so young, David. I want you to watch. I want you to watch Shakespeare in Love. I know the pandemic's over, but you can still stream some things on the.
Okay.
It's one of those good Netflix and chill things for, you millennials. But there's a scene in Shakespeare in Love where it's you have the producer of this play, and it's a Shakespeare play. You have the producer of this play speaking to one of his colleagues, and they're talking about the challenges of producing and financing a play. Mm-hmm. And the producer is basically saying to his colleague that how it all works out is a mystery. You kind of just have to have faith that it's going to work out, right? And I think it really is one of my favorite scenes, not so much for a movie, but for an entrepreneur, which is, and I'm not giving it justice, but people can go Google Shakespeare in Love quotes, and they'll probably Mr. Fennyman, and they'll find the scene. But this idea that even when it doesn't seem to be going in your direction, there's some reason for that. And the question is, what do you do with the information you are getting? Which leads me to my second favorite entrepreneurial quote, which comes from the philosopher Mike Tyson, who said, everyone's got a plan until they get punched in the face. And so what do you do when you get punched in the face? Because every entrepreneur gets punched in the face, right? And so, figuring out what to do after that happens is probably the single most important thing you can do as an entrepreneur. I have no idea what the question was, by the way, and I don't know how I got here. So I apologize if I didn't answer the question. Feel free to ask it again.
What are some of the punches that you feel like led you to AltoIRA, or in early stages of AltoIRA?
I think part of it is actually believing that you have certain partnerships, excuse me, certain partnerships lined up and ready to happen, only to have at the 11th hour those things go sideways and or just completely implode. And that happened to us a couple times. So the question is, what do you do when that happens? And if you believe in what you're doing, you just figure out another way. And that's really easy to say and really hard to do. And look, we all know that 9 out of 10 startups are going to fail. Right. And so I believe strongly that for the 1 out of the 10 to actually work and to make it, you have to get lucky along the way. And there are other people who say luck is where opportunity and hard work intersect, and I believe that. I'd probably add one line to that equation, which is awareness. So you're working hard, there's an opportunity, but if you don't see it, if you don't recognize it, how much use is it? So anyway, I just thought of that one on the fly, so I'm going to take it, I'm going to steal it again for myself in the future. Now it's where hard work, opportunity, and awareness intersect. I'm still trying to figure out how to bisect forget it. I was just thinking of what a teacher used to say to us in like 7th grade geometry class or something. But I can't remember I'm too old. I can't remember what that was.
Are you familiar with Naval Ravikant's podcast? I think he's the founder of AngelList. I'm not sure if he is still.
I'm familiar with Naval, but I don't watch his podcast.
Okay. I think his podcast is amongst one of my favorites, and it seems like, based on what you've shared, you'd probably have a lot in common in terms of thinking about startups, in terms of preparing yourself, as well as trying to be aware of your surroundings to see the opportunities where other people have yet to identify.
Well, while I don't listen to Naval's podcast, I do read a lot of his tweets, and I think his life philosophy is one that resonates with me. So I'll say that.
His podcast and his tweets are effectively one and the same. They're just longer or shorter versions of the same content.
Well, then I'll just stick with the tweets because that's faster.
It's true. Or to be fair, I think he has summarized all of his thoughts on I think one mega long podcast, and it's about 2 or 3 hours long. But that's effectively all of his thoughts condensed down to 3 hours.
If you ask my team, my attention span is good for 7 minutes.
Okay.
And then I'm thinking about something else by then, so they kind of got to get it in quickly.
Something that impresses me about college is the fact that they have these, I don't know, sometimes even 3-hour-long lectures, and I have no doubt that no one in the room has a 3-hour-long attention span.
That's insane to me. So I have a son who just graduated, a week ago today, and in fact he's driving home from college and should be here later today, I understand. And I have a daughter who's she's finishing her sophomore year. She's still doing finals this week, and especially in the age of that we all just lived through, the pandemic, and sort of witnessing at times when they were still here during the pandemic, having to attend these lectures, online. I could think of, I literally could think of nothing worse. It's just pained me to know that every college student, quite frankly, has lived that existence for the last kind of 18 months or so, whatever it's been. But hoping that they get back to classrooms, next semester.
The awful thing is, and correct me if I'm wrong here, but as far as I'm aware, tuition is the same.
So, in fact, tuition has been raised for some of these schools, which, don't get me started. We can talk about that. But, I think Scott Galloway is, I think he gets it right, and I can't even begin to do justice to his podcast and emails. But the idea that we're going to be paying more for higher education in this scenario where, they charge the same when, forget it. I'm just getting mad. So I'm not even gonna, I'm going to stop now.
I'll just put one more comment on the thread, and then we can switch back to our previous discussion. When I was at Berkeley, there are some classes I wouldn't attend because it was at 8 a.m. or 9 a.m. And I'm just not a morning person. So instead of going to class, you think the next intuitive thing is to watch the recordings of the class. And the funny thing is I didn't even do that. I watched the free versions of the class that was offered on, I guess, MIT's OpenCourseWare solution on YouTube. So it's effectively the same content, just slightly different questions, slightly different numbers, but effectively the core concepts are the same. And that's available for free. and the education's the same, and you wonder what you're really paying for, if not just the sheet of paper.
So there is a sheet of paper, and I would say that there are a handful of schools where the sheet of paper is valuable,
Right,
and
right.
most of the others, the sheet of paper, you might as well just put in the shredder. And what's really important is what you do with the knowledge that you gain, right? So there's information, and then there's real knowledge and the ability to execute on that knowledge. And I think the piece of paper for a lot of people out of a few schools opens doors and allows you to get a conversation.
Yeah.
Other schools not so much, and you're relying on your own grit and resilience and ingenuity to figure out how to open the door and get the conversation. So I imagine at Berkeley you probably had the opportunity to pay for recordings from a company called Panopto, or you could get your free recordings from MIT, where it's not even the same professor, it's a different professor.
Right.
But it sounds like you were in the math realm of some sort, maybe.
Computer science, same thing.
Computer
Yeah.
science, there you go, right? Which, it's the textbook. And so, I think college, and it ought to be priced this way, by the way. I think college, I really think college is for the socialization of young adults.
Yeah.
And the education of said young adults is something different. So
I totally agree.
yeah, but nobody cares what I think. So
Well, no one cares what you think until everyone realizes the common and increasingly popular opinion, where people are wondering, what is the value of college nowadays? Even for traditional programs around more of the STEM-oriented programs, you see the rise of things like these hacker schools, these hacker boot camps, where people are learning practical hands-on skills and applying them in project-based scenarios, which are arguably more realistic in terms of what's done in actual engineering jobs, as opposed to these complex math proofs that really don't translate to the workplace in terms of day-to-day activity.
yeah, and David, I think that's a great point. And if someone just gives you a problem to solve and says, here's the problem, go get it, what's the solution? You can probably apply the things that you're learning in that chapter, because, the problem's about that chapter. And yes, you probably have to apply some of the things that you learned in the chapter before. And chapters before. I think the trick actually is not in necessarily applying that knowledge to find the solution. The real trick is in identifying the problem in the first place. And so when the problem's not spoon-fed to you, it's understanding what the problem is and then figuring out what needs to be applied in order to find a solution, right? And that's where, look, there's a lot of horsepower, a lot of brain power that comes out of, a certain set of schools that we're talking about. But then there's just a certain set of resilience, grit, elbow grease, curiosity, desire, drive that comes out of the other schools,
Right.
which I think is incredibly, incredibly valuable, right?
I think it's highly underrated.
I can tell you that we hold it in high regard at Alto. As we're looking for team members, so they're actually not in our core values right now. We're actually adding 2 core values to our core value page because they've just become so apparent. One is see something, say something. You see something that's wrong, speak up. It doesn't matter what your title is, where you sit, what you look like, whether you're working from home or wherever. You see something, say something. The second one is ask why. Like nobody has all the right answers, and if something doesn't seem right, challenge it. Like be curious. Don't just accept instructions, right? Understand. And if the answer is because, well then that's not a good answer. That's not an answer. Right? And so I think the folks that we see come out of the schools that don't necessarily have the piece of paper that's going to open the door, they know how to ask why. And if they see something, they say something. It's like, these are the people that cold email me or hit me up on LinkedIn and just, say, and by the way, they do their homework. They know about Alto. They know everything they can about Alto before they reach out. Like, I just love that.
How many of these individuals have you come across across your career?
So all the time, actually. Now, look, as I said, I'm older, right? Like I'm 51 years old. And so I have a work life, a work history, a work experience, which has afforded me the ability to see some evolution in my thinking in this regard. And so employee number 2 was a cold outreach on LinkedIn from a woman who wanted to move to Nashville and was currently working at the FDIC. I can tell you that actually just in the last 2 weeks, I had 2 other soon-to-be college graduates. Actually, it was 1 college graduate and 1 MBA candidate reach out on LinkedIn. Those people are getting interviews. Right. And by the way, it's not everyone. There's something about the note that gets sent, and I can't readily identify it. There's some intangible nature to the message that's delivered. There's some humility to it, but along with the humility, it's, hey, I'm driven. Like, I want to succeed. Someone just needs to give me the opportunity, right? And it says that without saying that, and I don't know how to do that. But when I read it, when I see it, I know it, and I'm impressed because I wish I could do it. So I make sure that they get in the door. Whether or not they make it all the way through the end of the funnel, I don't know, but I want to make sure that these people get an opportunity.
Whenever someone reaches out to me on a one-to-one basis where there's demonstrated research, I 100% of the time give them a shot, just because I recognize it takes a lot of courage and guts to do that, as well as it takes a lot of time. They're not doing this at like shotgun scale, trying to hit up thousands of companies in the same day, or they could, and they're just very fast, but I wouldn't know.
No, you wouldn't know, and actually I don't think it works that way, because if they're going to send you that kind of note, they're going to want to make sure that it's something that they actually want to follow up on.
Right.
So one of the things that I do at Alto is I leave Wednesdays and Fridays. I don't leave them open, but what I say to the team is that if there are openings on Wednesdays and Fridays and you want to just chat, shoot the shit, put 15, 30 minutes on my calendar. Excuse me. I'd love to know. I'd love to know more about you. Right.
Okay.
And we had a young woman who was I don't know, maybe she was in her first or second week of Alto, and this a couple weeks ago. Put 30 minutes on my calendar, and because it's a pandemic, we're not back in the office yet, and even though this person is in Murfreesboro, which is down the road from Nashville, we haven't met other than on team Zooms, and so this was a one-on-one opportunity to spend time with her, get to know her. And she went to, I think she maybe even graduates this week. So she started early before graduation. She goes to MTSU here in Murfreesboro. And it's one of those schools where my experience to date is that I'll hire MTSU graduates all day long. I mean, there's just something about their drive and desire to do well that's incredibly energizing. And she was completely emblematic of that in my experience when I was able to connect with her for 30 minutes. It was like awesome. Yeah.
So before I left my corporate role, I used to be an engineer at Uber. And one of the first employees at Uber is a guy named Ryan Graves. And he literally just responded when our first CEO posted a tweet looking for talent. And this guy, as far as I'm aware, doesn't have a traditional education, or if he does, it's not something that's directly related to the role. And when you're hiring employee number one, you need them effectively to be everything to the business just because the business works that way. And then over time, he demonstrated his just drive to do a variety of different things, and he led a bunch of projects, and all those projects went really well. The guy has no real formal training in leading a team, but he was able to match the occasion and grow with the company as it grew. And I have no doubt that I think when Uber went public, his equity is worth at least $1 billion for a guy who has a non-traditional background. And you're seeing more of that, and it's cool to see stories of those from founders as well.
So our employee number one is a guy by the name of James O'Brien, who I met in yoga class. And when we were getting ready to launch our AngelList integration, and which was our initial launch, I knew that we were going to need someone who really could work with customers well and just be that great front. First of all, James is the greatest conversationalist you'll ever meet. He's just an outstanding person. He's curious. He's a great learner. He's a good leader. And he has literally worn every hat at Alto, and so here we are 70 people later, and his roles and responsibilities continue to evolve and expand. And so, hopefully he gets that same kind of outcome.
Something that's cool is the fact that there are so many positions nowadays with all these startups where you can join with a specific responsibility expectation in mind, and over time do something that's completely not on this list, but yet you're still constantly growing. And I think people find that role really attractive, both from a company growth perspective as well as a professional development perspective.
Yeah, and it's not without its challenges, by the way. It's hard to go from, being someone who's wearing 12 different hats to someone who's wearing 8 hats to someone who's wearing 4 hats to, hey, we need you to wear 1 hat, right? And you feel like you're missing everything else because you're being asked to do just this one thing, right? Whereas, when it was 2 people, you knew everything that was going on. When it was just 6 people, you knew everything that was going on. But when it's 70 people, it's impossible to know, everything that's going on. It is a professional challenge, I think, for those really early employees to go from this multi-dimensional role to more specialized roles, and to do it well. and then to continue to grow professionally with the company as the company grows. And I think it's, a rare person who does it well. Yeah.
As the company leader, how do you decide when is the right time to transition from a small team with multi hats per person to a more specialized team where you do have that one person that does one hat, but they wear it well?
Yeah. David, I don't know the answer to that question. I think it's one of those things where if you're paying attention, it sort of happened before you know it needs to happen.
Okay.
So what's clear for us right now with respect to company priorities, what's clear is that we need people who know how to do X. And we want them to know how to do X better than anybody else. Right? The challenge for me as a leader is that I don't like hiring people who have been in our industry.
Oh, really? Huh.
And I don't like doing that because they can't unlearn what they think they already know.
Mm-hmm.
I think knowledge has a half-life. And I also think it's our job in what we're doing to push boundaries, to push edges, and to break norms, but not laws. And so too many people who have been in our industry. So think about Uber. Just about everything about Uber was, shall we say, regulatorily questionable. Right? But,
Okay.
So imagine if it wasn't Travis, but it was someone coming out of the taxi industry.
Right.
Starting. You couldn't start.
Yeah.
Because everything was just illegal. You can't do that. Right? And so our challenge is to find people with the skills to accomplish a particular role or responsibility where they can take what they are currently doing or have done in the past that isn't what we do, but apply it. And or to find people who are in industry but have been waiting to break the mold for a really long time, and now we're just giving the opportunity. So, that's a little bit harder to find.
Yeah.
But this is why I like folks who have not been in industry, because the world is their oyster. They have no limitations. They're like, well, we did this at Uber. Let's do it at Alto. Okay, that works for me. Let's see who stops us, right? So.
I really like that philosophy. I can't remember who labeled it, but it's like the concept of like either outside eyes or the outsider benefit or the outsider advantage, where since you don't have that preconceived notion of how something should be done, you just literally question everything and you are able to build a foundation that doesn't have any of the residual, baggage of the existing version or the one, if today's version 1.0, you have no attachments between version 1.0 and 2.0, and you're able to really push into the frontier of newness. How do you find people that you trust are capable of translating an outside domain into your current domain? Because I imagine it's a little harder to test competence in certain roles. Or correct me if I'm wrong.
No, you're 100% right. The first answer is that we make mistakes when we hire. I think we've been fortunate in that we've made few of them, and that they've tended to be in the same role. That part I wish I could undo.
Do you mind me asking you which role this is?
Yeah, marketing.
Okay, yeah, I've heard this.
I just, honest to God, it's just bewildered me. So now I'm giving up, and I'm actually hiring someone to help us hire the right person.
Okay.
in that role. No, the good news is we've really just been growing word of mouth. But also it's time to push on the gas a little bit here. And in order to do that, we need the right folks in the right seats. But again, I'm not looking for someone who necessarily comes out of fintech marketing. I'm
Right.
looking, right, so and part of that is because I don't believe that there's a marketing playbook where you can run the same plays for every same company. I just don't
Right.
think it works that way. So you make mistakes, and I think the key is, from an entrepreneur's perspective, is to correct your mistakes quickly. And you want to do it with kindness and empathy, but you also want to be upfront and direct, because otherwise it's not good for the company, it's not good for the person, and ultimately it's not good for everybody else on the team. So you want to fix that quickly. And I will say it's a funny thing to say that this is a strength of mine, but when I make a mistake, I own it, and I fix it pretty quickly on the hiring front.
I think it's a must-have trait for any CEO, just because if you don't, the company falls apart pretty quickly if we all just point fingers to someone else.
No, that's right. And the funny thing about having to be the one to do it, especially at the leadership level, is that it's uncomfortable for everybody else. It's like, but they just got here. And there are some things that you can't know until they're actually inside the tent and figure out that it's not the right fit. And we had that happen recently, and it's unfortunate, but it's the right decision. And so it's uncomfortable for everybody else. They're like, really? I mean, don't you think we should try and do X, Y, or Z? And in my experience, anyway, trying to do X, Y, or Z just delays the inevitable. It almost never turns around. I'm not going to say never does, but it almost never does. And I will tell you that we actually have a scenario internally. Now, this person was not in a leadership seat, and leadership seats are harder when you have the wrong person in them. But we basically gave this person sort of it's called a revival plan, and they absolutely crushed it. I mean, absolutely crushed it. And you love it when that happens, right? And so,
what was the pivoting point? What was the catalyst for change?
So we had a very direct conversation with this person.
Okay.
Yeah. And we just said, the path that we were on was not a sustainable path. Right? And so just, look, we are both honest and transparent. And we're honest and transparent with each other and with our customers. People, I saw someone reached out to the customer experience team over the weekend and said, hey, I want to see all the fees. And the question comes from the fact that rarely do any of our competitors show any of their fees. Like, you have to find the PDF download somewhere. And then you have to pull out your and then you have to pull out the microscope and or try and blow it up and try and it's like, if you sneeze, they charge you extra, right? and so all of our fees, literally all of our fees, are on our pricing page. One single page of the website. It's like 5 lines. And for the most part, there are really only two fees, maybe three, maybe a third fee. There's a transaction fee, there's a annual account admin fee, and then like there's a wire fee if we have to, because there's a bank charge associated with that, right? But otherwise, basically no fee. And they're like, hey, I want to see all the fees. And it's like, yeah, you're looking at all the fees. They're right there. No hidden fees, right? No, it's right there. So, very unusual for our industry.
It mind boggles me that it's 2021 and so many things are not transparent across, including but not exclusive to financial services.
Yeah, it's. I agree with you.
I was camping with some friends this past weekend, and we looked at one of our nutrition labels, and it literally just said, and then what's the term they use? Natural and artificial flavoring. I was like, well, that's literally everything in the world. Natural and artificial flavoring encapsulates literally everything. And I was like, how do they get away with this?
One of the things I like to say is that, because people refer to the self-directed IRA industry.
Yeah.
And I say that's like saying natural foods. It's a total garbage bag term. There's no definition around it. Other than maybe it doesn't have any of those artificial flavors. But, it doesn't mean it's good for you. It doesn't mean it's bad for you. It like natural food, right? And so self-directed IRA, you could have a self-directed account at Fidelity, but you can't invest in alternative assets, which is why we've gotten away from self-directed IRA, which is why we call it the alternative IRA. And so now our industry is adopting alternative IRA. And, so that's kind of cool. But
it was only a year ago that I was trying to figure out how to invest into Los Angeles commercial real estate using my IRA.
Yeah.
And it was messy.
Who'd you do that with? Diversifund or somebody else?
Oh, shoot, I forgot at this point. I think Entrust. I can't remember.
Oh, so you actually used a custodian to do it?
Correct.
Oh, okay. Yeah, Entrust is out of the Bay Area. They're out of Oakland.
Yeah, I do think that's right. Yeah. Do you consider them a competitor?
To a degree, in some things, sure. Yeah.
If I'm understanding it correctly, your target audience is generally anyone who has or wants to self-manage their IRA. Is that right?
So that's broad.
Okay.
I'm going to say it's for any individual investor who is looking to build a diversified portfolio of assets that includes alternative asset categories, right? Like we were talking about. So venture capital and private equity opportunities, real estate, crypto, securitized collectibles, which could be artwork, or Michael Jordan sneakers, or automobiles, or Rolex watches, farmland, commercial real estate opportunities. There will be NFT opportunities, and so it's real. Our customers really specific to that individual who recognizes that we have shrinking public markets and the actual expected passive return in the public markets over the next 10 years is probably going to approximate negative 2%.
Okay.
Over the next 20 years, it may approximate 1%. At least it's positive, not negative. But, if you have all your eggs in that basket, that's not a good strategy. And the other thing is, the buying one more mutual fund is not getting you any more diversification.
Right.
It's just getting you more of the same public market exposure. So the correlation between them is just too great.
I see. Well, we're running up on time, and I just want to make sure we're respectful of your time. So I just want to end all of my calls with the same question. What's the best way for our viewers to get in touch with you?
So It depends on whether they want to talk to me or actually want to do something good with their investment portfolio.
Let's
If
say
they
both.
want to do something good with their investment portfolio, they should go to altoira.com, ALTOIRA.com. If they actually want to talk to me, they can email me, Eric Satz at altoira.com, or they can hit me up on Twitter. I love talking to people on Twitter. It's really kind of fun. LinkedIn too, for that matter. But that's all the contact info. I'm pretty accessible.
Sounds good. Well, thanks again for your time.
David, thanks for having me on. And, don't change your hair at all. I love it.
Me too.